So 3 fascinating trades on various time frames: S&P 500, S&P 8 range, and oil 13 range. Just taking these trades just for the fun of it, although we have multiple trades setting up on other time frames, just to show the versatility of alpha wave trader method that applies to any instrument in any time frame. So there we go. My S&P 500 range is already at the danger zone levels. That's why I moved my stop at break even. My S&P 8 range had barely came a couple of ticks to the danger zone and start seeing selling pressure at this level. So there we go. Puzzle remains the same. When price reaches danger zone, we expect selling pressure. This is what we call trade exhaustion levels. We completely expect this, as we discussed in Alpha Wave Trader Club. This level was absolutely critical and essential because this pullback can be monumental and price can push all the way back down to 1686 level once again. Oil 13 range came to my first target. And once again, that was incredibly cute trade that I'm monitoring for re-entry. As you know, I started taking various time frames just for the fun of it, because it don't matter to me what instrument and what time frame. That was our ES trade on 30-minute 10-point run-up. So will ES finally blast through the danger zone? The rally could be quite adorable. I'm not adjusting stop well too close to oil. The struggle is on. It's immense struggle, but I would love for oil to push all the way to 108.60 area. But this is how price moves, and that's why it is essential and critical to respect these levels. This exact same formula as you're witnessing decision point 1 on oil 13 range chart as you're witnessing on oil daily. Nowhere to take profits off the table. I expect the collapse to continue. This is nothing more but wave 2 bullish pullback. It's a fluff. When sellers will show up, they will show up with vengeance. But once again, formula is identical. Oil daily versus oil 13. What will price do? Once again, behaviors between two instruments are drastically different. This is an incredibly well-behaved instrument because of the liquidity. It's hundreds of times more liquid than oil. Let's take a look. Although we are on different time frames, typically I like to use 8 range. Currently on ES we have 20,000 contracts. What do we have on oil? 500. What does that tell you? And I'm very much surprised how few traders know and understand what they trade. This is what gives oil this drastic volatility. Oil is the beast of indices, lack of liquidity. Therefore, the volatility is extreme. The formations are endless. Trigger happiness is very dangerous and very much possible on oil, which is not possible on ES, S&P 500 future. This will test you to the core of your patience and discipline. Very few trades, but very well behaved instrument. Your potential to trade the lot size is unlimited. Today you start with 1-2. Years from now you could be trading 50 to 500, which is not something you can do on oil. 9 lots max. But those who love oil do not like being in pain. Once again reminding you, know your instrument, know your levels. Okie dokie, oil finally at decision point 2, adjusting my trail to 108.11. S&P 500 struggling Would love to see oil make it to the danger zone. Come on, oil, you can do it. Because I expect the collapse to come, and when it comes, it would be quite spectacular. Drastically more exciting than this bullish rally that had been incredibly slow as expected. So what am I waiting on, oil? This is what I'm waiting for, peeps. My guiding light to make you choose the danger zone as close as possible. When the sellers will show up at that level, that collapse will be quite fun to trade if you know how to trade pure price. So you could see drastically different behavior of the instrument. So today I think oil has a little bit of ES virus. They're moving at the same speed, which is quite unusual. Once again, my stop on 5 range, my second target is here. I am monitoring. I only entered first target on 8 range. This trade is in profit 2 points. This trade is in profit 1.5. Formula remains the same. Once again, I remind you, the reason why I'm incredibly bearish on oil, because clearly my daily chart spelled out the collapse is monumental. So when the sellers will show up, it will be the inception of incredibly powerful and very much favorite wave 3, the most critical wave in the market structure. The wave we're after on each and every trade we take. Hoo-hoo! Go ES! Adjusting my trail on ES to 1686.75. So as you see very clearly, we completely expected this bearish fluff to finish on ES, as ES having potential to make it all the way to 1693.50. All ES has to do is blast through the danger zone levels. Second target on 8 range had been reached. Oil, the crawl is continuous. I'm adjusting my stop. I can't adjust it any closer. I'm gonna adjust my stop to 108.11 is all I can do right now. So please scale out accordingly. Do not ignore these levels. All the levels, all the trades, ADV structure. So once again, 2 targets are in on oil. Only those trading more than 3 lots are still in this trade. More than 3 lots. Scaling out is absolutely critical. So bottom line is, no matter what lot size you trade, 70% out. The same thing on ES. Based on this structure, we're only hitting our third target, second here. Pay attention to the precision of the levels. Alright, so let's adjust our trail as expected, because as I spelled out, sellers will domineer this market. Oil is actually slower than ES. We have identity switch at the moment. As I expected, when bearish correction had finished, the volatility picked up with vengeance. Adjusting my stop to 1687.25. Adjusting my stop to 1687.75. So there we go, the moment of truth. Will oil blast through this level? If S&P will blast through this level, this rally will be magnificent. This is very critical, 1690. Multiple time frames, very critical resistance level. If I expect the collapse, it can be spectacular. That's why I'm leaving my trail so close. Clearly, formula remains the same. So once again, we discussed very clearly that 1690 was ultimate destination. This is danger zone 3 on the smallest time frame I would ever trade. S&P 505 range, because it's the smallest Fibonacci number I can touch. And once again, take a look at the magic of the puzzle. Danger zone on my 8 range had been reached, my target 3. Here we are in profit 3 points Here we're in profit 3.5. Depending on the lot size you trade, you have to respect how to scale out. Adjusting my trail to 1688 because I know that 1690 is a very critical number across multiple time frames, and as you're witnessing, it correlates with danger zone on all of my time frames. From my 30-minute, my cutie fruity 10-point run up yesterday to my 1 hour, I expect a massive pullback completely. This is where price will decide if this bullish rally will migrate into much larger time frames. And here's my oil. As expected, oil is much slower. Decision point 2 is here. Guess what? I've had enough. Moving my stop to break even. And why is oil crawling? For one simple reason. On daily chart, bearish trend is domineering. So when the sellers will show up, it would be such a fun ride to the downside. Once again, reminding you, know where the end of the minor trend is. Clearly showing you that it doesn't matter what time frame, it doesn't matter what instrument. Clearly, as spelled out, this very weak bullish run-up on oil ended decision point 2. My stop at break even. As spelled out, if 1690 will be broken to the upside, the rally will be magnificent. But on my trade, danger zone had been reached, which is my trade exhaustion level. Totally different entries, formula exactly the same. So once again, it's essential to know when to move your stop to break even. So what did we discuss? When the sellers will show up, they will be vicious selling pressure. So there we go, 2 targets on oil. We're still in a trades on ES. We discussed 1690 to be incredibly critical level for the price to break. That did not happen. And we knew that danger zone level is my trade exhaustion level, and this level had been incredibly critical. 3 targets on this chart, 4 targets on 5. Scaling out is absolutely essential. Monitoring, we're still in a trade on 5, we're out of the trade on 8. Monitoring oil very carefully. Oil is slower than ES. So here's our trade summary. Please do remember this is a combination of conservative and aggressive trades. Because if I'm in a trading room when we have very challenging corrective structure price in a danger zone, as Alphys would know, I will take aggressive trades, which are counter trend trades. If we take trades, if we are in the room during G20 meeting, those are aggressive trades. During FOMC days, those are just few of the examples. So if you would rehash and review trades for the entire year since the month of December, you would see very clearly that even with combination of aggressive and conservative trades, S&P 500 future is a very lovely instrument to trade. And as you saw with backtesting results from students, if you apply conservative method, if you trade only Monday through Thursday, if you do not trade during the months of December, which was still very lovely, August was quite cumbersome. Trading is not about staring at the screen. Trading is about being selective and conservative trader. So there we go. So far in the month of September, I had taken in the trading room 14 trades. Out of those 14 trades, 10 trades reached target 1, 8 target 2, 7 target 3. Combination of conservative and aggressive trades had given us 80% ratio. Because we had been trading during G20 meeting, we had been trading during incredibly difficult times. Here's oil. Oil's the beast of the indices. August still was a blast. August still was phenomenal month on oil. September Magnificent. Combination of aggressive and conservative trades. So far we had only 3 negative trades on oil. 16 trades reminding you the importance of respecting first target. 13 trades target 2 and the importance of moving top stop to break even and scaling out. Very, very critical. Essential to your trading success. Knowing where to take profits off the table. So there we are. We expected completely for S&P 500 to collapse from 1690, giving us very, very weak bearish correction. We've been in this trade for almost hour and a half. My 5 range still in a play. And what are we witnessing on oil? We're witnessing incredibly slow, very, very choppy market, even slower than the S. Once again reminding you know where the levels are. So what are you witnessing? You're witnessing the level we expected and monitored, 1690. We've been babysitting this level for the last 40 minutes. Price finally collapsed because danger zone had been reached. Once again reminding you, if you know where danger zone levels are, you know what not to enter into, where to expect your trade reversal. So guys, we'll monitor the formations. I may have a trade at any moment to the downside. So there we go. We are catching very much inception of the bearish trend. And you do remember what we discussed. Multiple time frames had been pointing and spelling out that the major trend is bearish. It ain't bullish. Everything that's bullish is just a corrective structure. Reminding us that when you would take a look on daily chart, when the wave 3 will show up, the selling will be vicious and can go on forever. So will this finally happen? Are you paying attention to the volatility of the structure? All price has to do is blast through the danger zone. Please take some profits off the table. What are you witnessing on ES as I spelled out? Sellers, I ain't buying it. So as expected, and as spelled out earlier, when I expected sellers to show up, they will be absolutely vicious. And what are you witnessing? Much faster pace trade on oil. But this magnificent trade on oil is still struggling to break through the danger zone levels, correct? We know that. That's my trade exhaustion level. So scale out accordingly. Respect this level highly. If my price will break through this level, I will migrate into the larger time frame. Trade number 4 this morning. You're witnessing again the reversal at danger zone levels from my trade exhaustion levels. Just like we saw on the previous 2 trades on S&P 500. Okie dokie guys, so we're updating our summary. So far in the month of September, 20 trades on oil, 17 trades reached first target, 14 second, 11 third. And here's our stats for September on S&P 500. 10 reached first target out of 14 straight, then we're scaling out accordingly. So have a fantastic afternoon. As always, I devote Fridays to teachings. Danny will be here before news, as we started opening before news. Each and every time there is major news release. Friday is for education. If you're trading on Friday, you're a super duper aggressive trader. So adios, look forward to seeing you on Monday.